ExamPrep.School. Arizona Personal Lines Non-Commercial Property and Casualty. Insurance Producer Exam. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Dwelling policy concepts, federal laws and regulations, general insurance concepts, homeowners policy concepts, insurance regulation, other types of personal insurance, personal automobile policy, property and casualty insurance basics. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Arizona Revised Statute Section 20-285, which of the following steps is required before issuance of a resident insurance producer license? A. Obtaining a certificate of authority to act as a surplus lines broker. B. Completing a director-approved pre-license education course. C. Passing the state licensing examination within 1 year of application. D. Submitting evidence of bond or financial responsibility. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is C. The correct answer is passing the state licensing examination within 1 year of application, because Section 20-285 mandates examination passage as a condition for licensure. Reason A is not correct. Obtaining a surplus lines broker certificate is unrelated to resident producer licensure requirements under Section 20-285. Reason B is not correct. Pre-license education is not explicitly mandated by Section 20-285 for resident producer applicants. Reason D is not correct. Evidence of bond or financial responsibility is not a prerequisite for initial resident producer licensure under Section 20-285. Question 2. Which of the following accurately describes the fingerprint submission requirement for Arizona producer licensing under state law? A. Fingerprints must be submitted to the Arizona Department of Public Safety and the FBI within 30 days of application. B. Fingerprint submissions remain valid for 6 years after initial submission. C. Applicants must submit electronic fingerprints to both the Arizona DPS and the FBI within 1 year of application. D. Only state-level fingerprinting through the Arizona DPS is required for resident producers. The correct answer is C. The correct answer is that applicants must submit electronic fingerprints to both the Arizona DPS and FBI within 1 year of application, as required for background checks under licensing statutes. Reason A is not correct. The statute allows up to 1 year for fingerprint submission, not 30 days. Reason B is not correct. Fingerprint validity periods are defined differently. 6 years validity is incorrect. Reason D is not correct. Federal FBI processing is also required. State-level submission alone is insufficient. Question 3. Under ARS Section 41-1080, which of the following documents satisfies the lawful presence verification requirement for an insurance producer license applicant? A. Arizona driver license issued by the Department of Transportation. B. U.S. Certificate of Naturalization. C. Valid foreign passport without an accompanying I-9 for arrival due to departure record. D. Tribal membership card issued by a federally recognized tribe. The correct answer is B. The correct answer is a U.S. Certificate of Naturalization, because it directly verifies lawful U.S. citizen status as required under Section 41-1080. Reason A is not correct. An Arizona driver license alone does not verify lawful presence for licensing purposes under Section 41-1080. Reason C is not correct. A foreign passport without an I-94 record does not document lawful entry or status. Reason D is not correct. A tribal membership card does not certify lawful U.S. presence under the statute. Question 4. Jordan has failed the Arizona property and casualty licensing exam 3 times within the past 12 months and is scheduling another sitting. Under ARS 20-284H, what is the maximum number of examination attempts allowed within a 12-month period before additional approved pre-licensing education is required? A. 4 attempts. B. 3 attempts. C. 2 attempts. D. Unlimited attempts with a mandatory waiting period. The correct answer is A. This option is correct because ARS 20-284-3H limits an applicant to 4 examination attempts within a 12-month period before requiring completion of additional approved pre-licensing education. Reason B is not correct. 3 attempts is less than the 4 attempts actually allowed before training is required. Reason C is not correct. Allowing only 2 attempts underestimates the number of tries permitted by the statute. Reason D is not correct. The statute does not allow unlimited attempts even with a waiting period. It caps attempts at 4. Question 5. Under Arizona revised statutes, which of the following actions is not included in the statutory definition of transacting insurance? A. Issuing an insurance binder pending policy issuance. B. Negotiating specific coverage terms with an applicant. C. Collecting premiums for an in-force policy. D. Providing estate planning advice unrelated to insurance. The correct answer is D. The correct answer is that providing estate planning advice unrelated to insurance is not part of transacting insurance, which covers solicitation, negotiation, execution, and post-contractual activities such as premium collection and claims handling. Reason A is not correct. Issuing an insurance binder falls within effectuating and executing insurance contracts, which is part of transacting insurance. Reason B is not correct. Negotiating coverage terms with an applicant is a core component of soliciting and negotiating insurance. Reason C is not correct. Collecting premiums for an in-force policy is a post-contractual transaction included in transacting insurance. Question 6. Under Arizona revised statutes, which of the following activities is classified as negotiating insurance with a prospective policyholder? A. Collecting renewal premiums on an existing policy. B. Proposing specific coverage terms to an applicant. C. Performing actuarial loss projections for underwriting purposes. D. Adjusting a claim to determine the amount of losses. The correct answer is B. The correct answer is proposing specific coverage terms to an applicant, which constitutes negotiation of insurance. Other activities listed are post-issuance premium collection, underwriting analysis, and claims adjustment, none of which are negotiation. Reason A is not correct. Collecting renewal premiums is a post-contractual financial transaction, not negotiation. Reason C is not correct. Performing actuarial projections is part of underwriting analysis, not negotiation. Reason D is not correct. Adjusting claims to determine loss amounts is a claims handling activity, not negotiation. Question 7. According to Arizona revised statutes, the issuance of a certificate of authority to an insurer signifies which of the following? A. Authorization to act as an admitted insurer in Arizona. B. Permission to self-insure obligations without regulatory filings. C. Exemption from financial solvency examinations. D. License to negotiate reinsurance treaties solely on behalf of other insurers. The correct answer is A. The correct answer is authorization to act as an admitted insurer in Arizona. A certificate of authority evidences permission to transact insurance in the state. It does not grant self-insurance privileges, exam exemptions, or reinsurance-only licenses. Reason B is not correct. Self-insurance privileges without filings are not granted by a certificate of authority. Reason C is not correct. A certificate of authority does not exempt an insurer from solvency examinations. Reason D is not correct. Negotiation of reinsurance treaties is not its sole purpose or limitation. Question 8. Under Arizona law, which of the following actions constitutes misrepresentation of policy terms as an unfair trade practice? A. Deliberately delaying the submission of a claim to the insurer. B. Offering a rebate to induce an insured to purchase a policy. C. Failing to maintain consumer complaint records as required by regulation. D. Stating that water damage is covered under a policy when it is specifically excluded. The correct answer is D. This describes knowingly misstating coverage by claiming excluded perils are covered, which directly misrepresents policy terms. Reason A is not correct. Delaying claim submission is an unfair claim settlement practice, not a misrepresentation of policy terms. Reason B is not correct. Inducing purchase with rebates is an illegal inducement practice, but not a misrepresentation of terms. Reason C is not correct. Record-keeping violations are regulatory compliance issues, not misstatements of policy coverage. Question 9. Which of the following is an example of false or deceptive advertising of insurance policies as prohibited in Arizona? A. Claiming that premiums paid are fully tax-deductible when they are not. B. Stating that the policy is endorsed by the Arizona Department of Insurance when it is not. C. Describing a producer's commission rates in promotional materials. D. Omitting the insurer's name and address from advertisement copy. The correct answer is B. This option presents a false official endorsement claim, which is expressly prohibited as deceptive advertising. Reason A is not correct. Misstating tax treatment is misleading but not specifically regulated under insurance advertising statutes. Reason C is not correct. Disclosing commission rates is permissible and not inherently deceptive advertising. Reason D is not correct. Omitting identification details violates form requirements but is not classified as false advertising. Question 10. An Arizona insurance agent posts on social media that a competing insurer is hiding policy exclusions and defrauding policyholders, even though the agent knows the claim is false. Under Arizona's unfair trade practices statutes, which violation has the agent committed? A. Twisting. B. Unfair discrimination. C. Defamation. D. Misrepresentation. The correct answer is C. This option is correct because under Arizona law, defamation occurs when a person knowingly publishes false statements that injure the reputation of an insurer or its agents. The social media post is a false, damaging statement made with knowledge of its falsity, meeting the statutory definition of defamation. Reason A is not correct. This is incorrect because twisting involves making misrepresentations to induce a policyholder to cancel, lapse, or switch policies, not injuring an insurer's reputation. Reason B is not correct. This is incorrect because unfair discrimination relates to charging different rates or providing different terms for similar risks, not making false statements about an insurer. Reason D is not correct. This is incorrect because misrepresentation refers to inaccurate descriptions of policy terms or benefits to a purchaser, rather than false statements harming an insurer's reputation. Question 11. According to Section 604 of the Fair Credit Reporting Act, a consumer report may be furnished for insurance underwriting only when the user has a permissible purpose. Which of the following consumer actions most clearly establishes a permissible purpose under Section 604? A. Submission of a completed application for new insurance coverage. B. Payment of multiple premiums on an existing policy. C. Filing a claim under an in-force policy. D. Requesting cancellation of an existing policy. The correct answer is A. The correct answer is that submitting a completed application for new insurance coverage triggers a permissible purpose under Section 604, as it constitutes a consumer-initiated business transaction for underwriting. Reason B is not correct. Payment of premiums pertains to servicing an existing policy and does not meet the consumer-initiated transaction requirement for underwriting. Reason C is not correct. Claim filing relates to benefits evaluation, not the underwriting process that defines permissible purpose. Reason D is not correct. Cancellation requests terminate coverage and do not initiate the transaction needed to furnish a consumer report for underwriting. Question 12. Under 18 U.S.C. 1033, which of the following actions is expressly prohibited for a person engaged in the business of insurance? A. Embezzling client premium payments for personal use. B. Inadvertently misplacing a policyholder's signed application. C. Soliciting insurance business without a valid license. D. Using non-public applicant data to target marketing. The correct answer is A. This option is correct because the statute specifically outlaws knowingly embezzling, misapplying, or converting insurance funds for personal use, which constitutes a federal offense under 18 U.S.C. 1033. Reason B is not correct. This describes an unintentional administrative error rather than a knowing conversion of funds mandated by the statute. Reason C is not correct. This is a state licensing violation and not one of the criminal acts enumerated under 18 U.S.C. 1033. Reason D is not correct. This implicates privacy statutes such as GLBA, but is not covered by the prohibited acts listed in 18 U.S.C. 1033. Question 13. In the context of personal lines insurance, which of the following most accurately defines risk? A. The contractual promise by the insurer to indemnify losses. B. The statistical probability that an insured event occurs. C. The monetary premium paid for risk coverage. D. The possibility of financial loss due to uncertainty of a perilous event. The correct answer is D. The correct answer is the definition of risk in personal lines insurance, which emphasizes the potential for financial loss arising from uncertainty rather than merely the likelihood, cost, or contract terms. Reason A is not correct. The contractual promise is a function of insurance coverage, not the inherent definition of risk. Reason B is not correct. While probability refers to likelihood, risk encompasses both that likelihood and the potential for resulting financial loss. Reason C is not correct. Premium is the cost to transfer risk, not the definition of risk itself. Question 14. Which statement correctly distinguishes pure risk from speculative risk in insurance? A. Pure risk allows for gain. Speculative risk does not. B. Pure risk is generally uninsurable and speculative risk is typically covered by insurance. C. Speculative risk pertains to lawsuits while pure risk relates to natural perils. D. Pure risk involves only the chance of loss or no loss, whereas speculative risk includes possibilities of loss, gain, or no change. The correct answer is D. Pure risk is characterized by outcomes of loss or no loss only, while speculative risk may result in a loss, a gain, or no change, making it fundamentally different in terms of insurability and outcome possibilities. Reason A is not correct. Pure risk does not allow for gain, it permits only loss or a neutral outcome. Reason B is not correct. This reverses insurability. Pure risk is typically covered and speculative risk is generally uninsurable. Reason C is not correct. Both risk types can arise from varied situations. Speculative risk is not confined to legal exposures. Question 15. A coastal municipality, aiming to handle potential flood losses, pays premiums to a private insurer to cede the financial consequences rather than relocating development, risk avoidance, retaining losses with its own reserves, risk retention, or investing in levies, risk reduction. Which risk handling approach does this reflect? A. Risk avoidance, eliminate exposure by relocating assets outside designated flood zones. B. Risk retention, finance flood-related losses internally through the municipality's budget reserves. C. Risk reduction, implement structural controls such as levees and improved drainage systems. D. Risk transfer, contract with an insurer to assume financial responsibility for losses. The correct answer is D. This approach exemplifies risk transfer because the municipality shifts the financial burden of flood losses to an insurer through premium payments. Reason A is not correct. This describes avoidance, which involves eliminating exposure rather than shifting financial impact to another party. Reason B is not correct. This describes retention, where the entity self-finances losses instead of transferring them to an insurer. Reason C is not correct. This describes reduction, which mitigates risk impact but does not shift losses to a third party. Question 16. Within a personal insurance contract, the requirement of consideration is satisfied by which of the following exchanges? A. Payment of premium by the insured in return for the insurer's promise to indemnify. B. Submission of a signed application matched by the insurer's signature. C. The insurer's obligation to defend claims filed against the insured. D. A guarantee that policy language is clear and unambiguous. The correct answer is A. Consideration in an insurance contract is the exchange of value. The insured's premium payment for the insurer's promise to pay covered losses. Reason B is not correct. This describes offer and acceptance, not the exchange of value. Reason C is not correct. Obligation to defend is a contractual duty, not the premium promise exchange. Reason D is not correct. Clarity of language relates to contract interpretation, not consideration. Question 17. Which applicant lacks the legal capacity to form a personal insurance contract under the competent parties requirement? A. A 16-year-old applying for homeowners coverage. B. An adult with hearing impairment applying for auto insurance. C. An individual who recently declared bankruptcy seeking property insurance. D. An applicant who failed to disclose previous minor claims. The correct answer is A. Minors lack legal capacity to enter contracts, making agreements with underage applicants unenforceable under competent parties rules. Reason B is not correct. Hearing impairment does not impair contractual capacity. Reason C is not correct. Bankruptcy affects finances but not mental capacity. Reason D is not correct. Non-disclosure is misrepresentation, not lack of capacity. Question 18. Which of the following proposed insurance agreements would be unenforceable due to failure of the legal purpose requirement? A. A policy ensuring proceeds from an illicit narcotics trafficking operation. B. Coverage for auto liability arising from lawful business operations. C. Property damage protection for an insured's primary residence. D. Professional liability insurance for legally licensed practitioners. The correct answer is A. Contracts must have a lawful objective. Ensuring illicit proceeds is against public policy and violates the legal purpose requirement. Reason B is not correct. Lawful business operations satisfy the legal purpose requirement. Reason C is not correct. Ensuring a primary residence is a legitimate purpose. Reason D is not correct. Professional liability coverage for licensed practitioners is lawful. Question 19. A homeowner submits an application and initial premium payment to Secure Home Insurance requesting a $500 deductible. 2 days later, Secure Home returns a signed policy declaration indicating a $1,000 deductible. The homeowner pays the balance due without initialing or otherwise marking the new deductible. Under the offer and acceptance process, is there a binding contract? A. Yes, because the homeowner's payment of the balance constitutes acceptance of the insurer's terms by conduct. B. Yes, because the insurer's issuance of the signed policy operates as acceptance of the original offer, regardless of the deductible change. C. No, because the insurer's amendment of deductible terms is a counteroffer that the homeowner must expressly accept to form a contract. D. No, because acceptance must be communicated in writing, and payment alone cannot establish contract formation. The correct answer is C. This option is correct because the insurer's change to the deductible constitutes a counteroffer, and acceptance requires explicit agreement to the modified terms, which did not occur. Reason A is not correct. This choice incorrectly treats payment as acceptance of changed terms. Payment alone does not bind the homeowner to unagreed modifications. Reason B is not correct. This choice mistakenly ignores that changes to the original offer create a counteroffer rather than acceptance. Reason D is not correct. This choice overstates the writing requirement. Payment could serve as acceptance of agreed terms but cannot bind unaccepted modifications. Question 20. Which of the following best describes the ownership structure of a mutual insurer? A. Owned by the state government and managed by a regulatory commission. B. Owned by external investors who receive dividends based on share price performance. C. Owned by its policyholders who elect the board of directors and share in surplus distributions. D. Owned by the federal government as a public insurance entity. The correct answer is C. A mutual insurer is owned by its policyholders who elect its board of directors and share in any surplus, aligning ownership with insureds. Reason A is not correct. This suggests a state-owned entity, which is not how mutual insurers are structured. Reason B is not correct. This describes a stock insurer whose ownership is through investor-held shares. Reason D is not correct. This refers to a federally owned program, not a mutual insurer model. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.